All right, everyone. Here we are with ticker symbol NIO Neo Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Neo Inc. has actually had some sideways movement. Interesting enough. Now, it is going pretty steep in a downward direction, and that right there is still not a red flag, but very interesting enough. A lot of sell-off is happening, and it's going pretty quick. Now, I would imagine for this to actually kind of pick back up and kind of continue that movement so that it can resemble what we've seen before. Obviously, it started to go down, and it was going down in a downward direction. So that's kind of normal, and we can see that here in the previous times. But very interesting that it's quickly going down, and it's getting closer to the 50-day moving average. So we need to see if this holds itself up with some volatility up and down. That will show that this rise was a pretty healthy one, and it's actually holding itself up from falling. So let's look at this closely for next week and see what is important for Monday. Obviously, there's a lot of uncertainty and fear right now due to the fact that the S&P 500 and the Dow and the Nasdaq are all getting affected slightly in some way or another due to the fact of sell-off and the uncertainty, the fear, and also the elections are coming right around the corner, which has some type of impact indirectly or directly to the market overall. So let's look at how this is actually been turbulent. It actually broke through the support and brought itself back up, broke through it again, and it's slightly hanging out below it, slightly trying to come back up. Now, if the bulls can create some momentum here to continue, they can get back up into this area, but we need to move this to the new locations so we can see what is important for tomorrow. And these are some important numbers. And when I say tomorrow, I mean Monday. It's Friday. Excuse me when I say tomorrow. I'm used to saying this because we do this all week, but I mean Monday. So let's see what is important for Monday. And one of the most important things here is the 50-day moving average. The 50-day moving average is 30.09. I'd write that down. We're getting real close to it, and it's catching up to the price, and it can by default get this into bearish territory. As long as we're above it, we're in bullish territory, and as long as we're below it, we're in bearish territory. So that is important to keep in mind. And the lowest point of the day is slightly below that at 30.05. So keep that in mind. One of the highest points after this dipping was up here at 31.66, and keep that in mind as well. If this breaks through this resistance and starts to work its way up to newer highs, that would be the next one. But let's narrow this down and look at where we're at right now. We're at 30.62, and for the bulls to continue above the 50-day moving average and pull away from it in an upward direction, they need to break through 31.10. They need to turn 31.10 into a support and break away from it to hit newer highs and new resistance levels. Super important for the bulls to keep that in mind and go ahead and start moving up to hit new highs and new resistance levels by pulling away from the 50-day moving average and turning 31.10 into a support. They need to break through this resistance to stay in bullish territory. I want to emphasize that the bulls need to break through this to continue to work their way up to new highs. If not, this will catch up to the price and by default end up in bearish territory, giving more leverage to the bears. Now, on the other hand, we have our support level, and this is what the bears want to break through. It's the lowest point as this was actually falling in a downward direction before this slight recovery and hitting that highest point here in the last couple hours of the day before leveling off, and that is 30.24. If 30.24 does get broken through, there's a very small window between 30.24 and 30.09 to go ahead and pay close attention to the behavior of this stock. So if this is quickly hitting newer lows, I want to emphasize to all investors, pay very close attention to how this is reacting and how quickly is it reaching the 50-day moving average or about to cross it to end up in bearish territory. Because once it ends up in bearish territory, this could start to hit newer lows and new support levels, and it's going to be much harder for the bulls to reappear and bring this back up. So I want to emphasize, pay very close attention to 30.24, how quickly it breaks through it or hangs out around it, and if there's a chance for the bulls to reappear and bring this back up away from the 50-day moving average in an upward direction, or if it's about to cross it and starting to pull away from the 50-day moving average in a downward direction. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.